Investment markets have been pretty mixed for the first quarter ending March 2014. The ASX 200 rose by 0.7% for the quarter, leading to an overall rise of 8.6% for the year, while the Dow Jones Industrial, which measures the American market, fell by 0.7% for the quarter and an overall rise of 13% for the year. Significantly, however, the Australian dollar actually rose by 4% in the first quarter of 2014. This rise dragged on the performance of our model portfolios, with many of these assets, or our growth assets, exposed to the Australian dollar. The Clark Pacific model portfolios have performed well when you look at the returns over the last 12 months to the quarter ending March. However, over the last quarter, the performance has been a little bit more mixed. Our most conservative portfolio, with assets largely in term deposits, bonds and low volatility assets, has returned 0.42% for the quarter, which is an overall rise of 6.42% for the year. On the most aggressive side of our model portfolios, there was an actual fall of 1.16% for the quarter and a rise of 17.23% when you look at that return on an annual basis. The volatility, or the small fall for that quarter, is largely contributed to by the rise of the Australian dollar. We're starting to see some really clear investment themes coming through the market at the moment. One of those is a disparity in pricing between ASX listed companies. We're seeing some companies fitting into a market darling sort of category that are trading at what we see as unsustainable valuations at very high PE multiples. On the other hand, we're starting to see some companies still suggesting some good value. We're seeing a broad economic trend of resurgence of East Coast cities, and we're starting to see, or seeing, the continued slowing of WA and some other rural centres that are exposed to the mining boom as that starts to slow. During the recent company earnings season, we didn't see a lot of top-line revenue growth. Rather, we saw earnings growth through cost-cutting, efficiency measures and the deployment of technology. We're actually seeing deployment of technology on a broader front, where we're starting to see a lot of incumbent companies starting to be challenged by new technology players and niche smaller players in the market that represent great investment opportunities. On the international side of things, we still believe the Australian dollar is overvalued, and we believe that on balance it will fall. In the US, we're still seeing some good economic and investment trends starting to come through the market. This is further buoyed, and we've been buoyed by comments by Berkshire Hathaway and Warren Buffett, their chairman, at last week's AGM. On the Chinese front, we're seeing continued growth there of about 7.5%. We still believe fully in the westernisation and the investment opportunities that represents to our clients by investing in that Chinese growth story. However, we're starting to become more attentive to and pay more attention to the Chinese shadow banking system and what sort of risks that may represent to our investors that we'll continue to monitor and watch. On the European front, some of our investment companies such as PM Capital are starting to invest in what look to be really exciting, low value in terms of their strike price investment opportunities in Europe, such as some banks in Italy and some investment opportunities in real estate in Spain. We're excited by these opportunities. The Clark Pacific Investment Committee has decided not to make any alterations to the model portfolios for this quarter. After meeting with our asset consultants, taking in economic research and meeting with each fund manager that manages money in the model portfolios, we've decided that on balance it makes sense to keep the portfolios as they are and let some of those investment themes and ideas play out in the medium to short-term future. So we've made no alterations this quarter. If people have any questions, please don't hesitate to contact me or one of the Clark Pacific team. Thank you for watching. We look forward to speaking with you next quarter.